Webull stock closed on Wednesday, December 3rd, at $9.26, finishing the day up 26 cents. Throughout most of the session, the stock moved tightly around the $9 range, dipping slightly below it and then pushing above it before settling back into balance. What made the day notable was the late session bump that lifted Webull into the green and away from its intraday lows. That late push suggests buyers were willing to step in and accumulate shares as the session approached its close. Even though the move was modest, it reflects a developing change in behavior around the stock, especially after the volatility Webull has experienced this year. Over the past several weeks, Webull has climbed gradually from the $8 range toward a more stable position around $9. Earlier in the year, the stock struggled to find consistent support. Now it appears to be building a foundation, with buyers repeatedly stepping in when the stock dips and creating a pattern of higher lows. This kind of price action often emerges when a stock begins transitioning from a period of weakness into a phase of stabilization. While this does not signal an immediate breakout, it suggests that downward pressure has eased and that the market is reassessing the stock with a more balanced perspective. The emerging stability is supported by what the company has been doing behind the scenes. Webull recently posted one of its strongest financial quarters in recent memory. Revenue increased more than 55% year-over-year. Trading-related revenue rose sharply as well, climbing more than 60%. Customer assets grew, and the company achieved profitability. These results indicate that Webull's business model is maturing, and the platform is successfully retaining and engaging users. For a financial technology company in a competitive space, turning profitable is a meaningful milestone that communicates operational discipline and scalability. Improving fundamentals form the backbone of any potential recovery story. Investors want to see revenue growth, user expansion, strong margins, and a clear path to profitability. Webull has delivered those results, and that financial momentum gives traders and long-term investors a reason to view the stock differently. When strong business performance meets compressed stock valuations, the result is often a recalibration of investor expectations. That recalibration may already be underway as the stock forms a more stable trading pattern. Another key element in Webull's evolution is the platform's ongoing product development. The company recently introduced an artificial intelligence decision tool called Vega. Vega provides users with integrated insights, market analysis, and real-time signals to assist with decision-making. This type of feature marks a shift in Webull's identity. Instead of being viewed as a simple low-cost brokerage, the platform is positioning itself as a more comprehensive financial technology ecosystem, equipped with advanced tools that appeal to both new and experienced investors. This phase of expansion reflects how the broader fintech landscape is changing. Users want platforms that offer more than just order execution. They look for education, analytics, alerts, and personalized tools that help them understand complex markets. By integrating AI-driven capabilities, Webull aligns itself with this shift and strengthens its long-term competitive position. These developments may not generate immediate explosive growth, but they contribute to the underlying story that supports the stock's price stability. Even with these improvements, Webull stock is still far below its highs from earlier in the year. Investor sentiment has been cautious. Analysts have lowered their price targets, despite acknowledging the company's potential. Valuation pressure continues to reflect concerns about market volatility, retail trading participation, and macroeconomic uncertainty. However, this creates an interesting dynamic. When expectations are low and fundamentals are improving, even moderate good news can generate outsized price reactions. That dynamic is part of what makes Wednesday's late session bump intriguing. A stock that has been battered typically responds weakly to news or market movements. But when sentiment begins to stabilize, late-day buying can reflect increased confidence. Traders may be anticipating the next catalyst or simply recognizing that the current price reflects an attractive entry point. When this type of behavior occurs repeatedly, it can indicate that a new equilibrium is forming. The larger macro environment also plays a role. Retail trading activity has been inconsistent in recent months. When markets experience uncertainty, some retail investors retreat while others become more active. Historically, spikes in volatility tend to increase activity on trading platforms like Webull. As economic data shifts and interest rate expectations adjust, volatility may rise once again. If this happens, it could act as a tailwind for Webull's revenue and user engagement. Because Webull's financial performance is closely tied to market participation, changes in the economic landscape can meaningfully impact the stock. If investor sentiment improves or if markets enter a more active cycle, Webull could benefit quickly. Conversely, a stagnant or quiet market may slow momentum. This duality makes Webull a stock that reacts strongly to macro trends, and it means investors tend to watch both internal developments and external conditions closely. Webull's current position in its 52-week range reinforces that sense of potential. The stock's highs earlier in the year were significantly above current levels, while its lows were near $7.57. When a stock trades far below previous highs, two opposing narratives emerge. One narrative says the stock fell because the market lost confidence, and further downside may follow. The other says the stock is deeply undervalued relative to its long-term potential, and recovery could be significant if the business keeps improving. Webull sits right at the intersection of those narratives, making this period particularly important. The price action on Wednesday reflects a stock that is no longer moving downward on momentum alone. Instead, it appears to be moving within a tighter structure, defined by new support around $9 and resistance slightly above. This structural tightening, also called consolidation, is often what precedes a new trend. Consolidation does not guarantee an upward move, but when it coincides with improving fundamentals, it becomes more meaningful. In Webull's case, the combination of stability and steady earnings suggests the groundwork for a future move is being laid. An intriguing angle for analysis is the idea that Webull is entering a quiet rebuilding phase. The company is stabilizing financially, improving its platform, and demonstrating resilience in its stock price. This is not the kind of hype-driven story that defines certain periods of the market. Instead, it reflects the kind of calm, steady rebuilding that often precedes renewed investor interest. That calm can be the precursor to larger movements when conditions align. Another angle worth exploring is the restoration of investor trust. Trust is not regained immediately after a difficult period. It comes back slowly, through consistent performance, positive developments, and behavioral changes in the stock itself. Webull has shown improvement across these categories. Its earnings are stronger. Its technology is advancing. Its user base is growing. And its price action is stabilizing. Together, these signals suggest the company may be quietly working its way back into a healthier long-term position. As investors look ahead, the levels to watch remain clear. Support appears to be forming around $9. Resistance sits near $10. A sustained move above $10 with volume could signal the beginning of a new upward trend. If the stock slips below $9, the consolidation phase may continue. Either scenario aligns with a stabilizing company that is preparing for its next chapter. Webull's story at this moment is about emerging potential. It is about a company improving its financial performance and adding new tools while its stock trades far below previous highs. It is about a platform adapting to changes in the market and evolving to meet user expectations. It is about a price pattern that reflects both caution and interest. And it is about the possibility that a new phase of growth could begin if sentiment continues shifting. The late session buying on Wednesday fits into this broader narrative. It signals interest at current levels. It suggests that buyers are no longer waiting for deeper dips. And it reflects the subtle behavioral changes that often appear before a stock transitions from stabilization to a more defined direction. The closing price of $9.26 is not remarkable in isolation. What makes it meaningful is the context surrounding it, the support forming beneath it, the steady financial improvements behind it, and the shifting sentiment that may be beginning to take hold. Whether the stock moves higher or continues consolidating, the groundwork for a potential long-term recovery is becoming clearer. As the company continues to develop its platform, deliver strong results, and navigate market conditions, Webull remains a stock worth watching closely.